Will the Bank of Jamaica start ramping up interest rates, and how will this affect your investments? I'm Kalila from Money Media, giving you money news for the Caribbean. Now, in case you missed it, Jamaica's point-to-point inflation rate fell to 1.2% in August. This means that the cost of goods and services this August is only 1% higher than it was last August. That's the lowest it's been since the 1960s. And this is good news, especially considering we're coming from a high of 11% during the pandemic. According to the Statistical Institute of Jamaica, the main causes of inflation over the past year were an increase in prep school fees and dining out. However, those were buffered by price drops on mobile data plans. So, yay, prices aren't going up as fast. And this news could also spur the Bank of Jamaica to speed up its interest rate cuts. Now remember, the BOJ actually wants inflation to be around 5% because they theorize that a natural increase in prices means the economy is growing. Typically, when inflation falls below that target, it means that demand for goods and services is low. The central bank will then try to stimulate demand by making it cheaper to borrow money. So they lower interest rates, which trickles down into everything from mortgages to insurance to the cost of fast food. This is expected to lead to more consumer and business spending and eventually a rise in inflation. Now, the BOJ has been slowly cutting interest rates for the past year. They held the rate at 7% for 2 years, with the first cut coming in August 2024. The BOJ's base policy rate is 5.75% as of August 2025. So when I say slowly cutting, I mean slowly cutting. Now, maybe inflation being below target will prompt larger and more consistent cuts. Plus, the U.S. has also resumed cutting their interest rates. The U.S. Federal Reserve announced its first interest rate cut for 2025. They went with 25 basis points, bringing their base policy rate to a range of 4 to 4.25%. And they've signaled that more cuts could come this year. And as interest rates fall, that also has implications for your investments. Lower interest rates make the bond market less attractive, which makes the stock market more attractive as people take bigger risks for higher returns. So while the BOJ historically has not waited on the U.S. to make a move, this is a positive sign. Of course, it's not as simple as just cutting rates because inflation is down. There are other factors to consider, like geopolitical tensions. The U.S. and China keep seesawing in their trade war. Plus, things are much better now between the U.S. and the EU. And let's not forget that the Russia-Ukraine war is still going on, and tensions in the Middle East get hotter every day. And it's hurricane season. Sections of the island were literally underwater recently. If we get another barrel, that could also change things, knock on wood. So it's a lot for the BOJ to consider. Their next policy decision is due on September 29, so we'll keep an eye out for what they decide. And that's the bottom line. But what do you think? Should the BOJ lower interest rates in response to low inflation? Let me know in the comments. And if you want to learn more about investing strategy, go to moneymissionja.com for more info. The link is in my bio or in the description. Let's get this money.
Let's get this money.